Okay, we'll go on and start with the euro. Just a quick recap, and then we'll move on into the news. Okay, I put the key on the daily is going to be the 1372 on the euro, which is right where we're at. You'll see this here, but we'll take a look at it here on the daily. We know about the pivot, but right now it's the key is going to be 1372, which is actually going to be the same level here on the 2 hour. Right here, you can see the importance of 1372, and they are holding or just right at it, above it. And I'd put on here on the 2 hour, the 1372 will be basically got a pivot with pressure return on a close below on this time frame. The upside pivot for further momentum is going to be an upside close above 1420, which would also take out the medium-legged doji, opening a challenge of 1489. So when we look in here on the 2 hour chart, you can see this medium-legged doji. And here, right there. That's going to be the key for the upside. If we can get that upside, we'll be able to go in and challenge right up here at 1489. Right there. So that's going to be the key on the upside. Right now, I think today's going to be a mixed day, and I believe probably rather quiet as we come into the U.S. sessions. I know some people aren't expecting much movement. I think there's a potential for some pretty good movement, but I think a lot of it is going to be dependent on whether there's a chance that the Democrats could take the Senate, which is supposed to be fairly fading. But I think that if you were to start to see the chances, you'd probably see the dollar probably sell off. So I think you're going to get a little bit of a volatility on Tuesday, and we'll see how the whole thing goes and plays out. But I think right now it's going to be all about price structure, and we'll go in and go over that on each of these as we cover the news. So we'll just go in and take a look where we stand here. Now we see the cable still holding up very well up in here, and we'll get to the news, and then we'll do a quick overview and did the Asia analysis for most of the majors. We're going to get to that. So it says the Australian New Zealand dollars eased from 5-week highs on trade and volatility. The Australian New Zealand dollars eased from more than 1 month highs on Monday, with trading expected to be volatile in a week where both countries' central banks hold policy meetings and the U.S. midterm elections preoccupy financial markets. The Aussie Dollar was last at 71.95, easing from 72.59, which was the highest since September 27th after the solid U.S. jobs data and cemented expectations for a December rate hike. The Reserve Bank of Australia meets on Tuesday when it's widely expected to keep interest rates unchanged at 1.5% for the 27th consecutive meetings. The RBA will publish its official forecast for inflation and economic growth on Friday. New Zealand counterpart is seen as all but certain to hold its policy rate at a record low 1 3/4 after its meeting on Thursday. The market, however, is hoping to see a more hawkish tone in its comments after the meeting, failing which there could be a sell-off in the currency. Kiwi would also be tested this week with a closely watched employment and wage data due on Wednesday. Westpac said in a note it remains bearish on the New Zealand dollar in the medium term, targeting sub 64 by year end. That'd be pretty huge because remember, we talked about that. There's huge support at 64.12. So that'd be pretty big deal if it got below. Well, they're targeting sub. That'd be a big deal. We'll see if that can happen. The U.S. dollar should continue to strengthen this year if the Fed hikes more than three more times as we expect. In addition, the New Zealand U.S. yield could decline even further, said Emery Spitzer, head of New Zealand strategy at Westpac. The Kiwi bounced 2.3% last week, putting up its best weekly show since early 2017 on short covering and a strong rally in risk assets globally. Elsewhere, investors keenly await Chinese President Xi Jinping's speech later on the day for any clues on the course of an ongoing Sino-US trade war, which markets reacting to even the most minor piece of news in the dispute. Global financial markets are also expected to be jittery ahead of a U.S. congressional midterm elections on Tuesday. Opinion polls show a strong chance the Democrats could win to control the House of Representatives after 2 years of wielding no practical power in Washington, with President Trump's Republican Party likely to hold the Senate. And that's the case. I don't think there's no doubt here. From what I've seen, there's no doubt they're going to take the House. What the chances are is it's waning is the opportunity to take the Senate, which I think that if they were to take the Senate, you'd see all kinds of problems in there. So hang on. And dollar ends a winning streak before elections and euro struggles. The dollar dipped on Monday after 3 consecutive weeks of gains as investors took profits before U.S. midterm elections this week. That may fuel a new bout of volatility for global markets. Notwithstanding a dollar sell-off in the second half of the last week, hedge funds added to their dollar holdings, taking the net long positions to its biggest level since 2016, as the latest data have encouraged more bullish bets. Some positions scoring issue on the dollar before the elections this week, though the euro is also soft on the latest news from Europe, said Manuel Oliveri. Investors head into the U.S. congressional elections with Democrats facing a strong chance of winning control of the House of Representatives, with Republicans likely to keep the Senate. Speculators add to their net U.S. long dollar bets, taking the value of the net long dollar position to $26.75 billion in the week ending October 30th, nearing its highest level since December of 2016, according to the latest futures data. Friday data showed U.S. job growth rebounded sharply in October, and wages recorded their largest annual gain in 9.5 years, pushing Treasury yields on 10-year maturities to 3.2% on Monday. Strong U.S. data has brought into prominence the diverging trends between a robust U.S. economy and its struggling European counterpart, with Citibank Economic Monitor showing the European index near 2018 lows. Though ECB policymakers said last week the new target long-term financing operations are an option they might consider in due time, sources have told Reuters that a new round of loans is not imminent. The latest news heightens the downside risk for the euro from weaker economic data for a while, said John Marley, FX strategist. Eurozone growth has the potential to recover from the crisis area lows. It was just in regards, not anything major, just some general stuff from the ECB. Supply constraints are likely to become increasingly binding going forward, which would be conducive to a gradual strengthening of wage growth and underlying inflation. Eurozone economy grew by an annual 1.7% in the third quarter. Moving on, UK services growth slows to a 7-month low as firms fear the outlook. Business activity in Britain's dominant services sector slowed to a 7-month low last month, and firms' expectations for the coming year are the gloomiest since just after the 2016 Brexit vote. Of course, probably a lot of this had to do with right before we started getting things looking a little bit rosier. So probably, as the saying goes, darkest before the dawn. Does say the index had dropped to 52.2 in October from 53.9 in September. Britain's economy has slowed since the June 2016 referendum, added signs that a patch of solid consumer-led growth over the summer months is now fading. With autumn upon us, consumers are tightening their belts with the prospect of a greater certainty seeming as distant as ever as businesses are struggling to maintain their confident outlook. Also, there's global economy worries. Last week, the Bank of England's Britain's rate of economic growth would have to 0.3% in the final 3 months of 2018, but we may see a rebound from this area. Governor Mark Carney said the central bank wouldn't look beyond what it expects to be short-term growth volatility and might need to raise interest rates faster than the market had expected. The two PMIs, combined with more robust construction data, are jointly the weakest since March and point to a quarterly growth of 0.2. Business said new orders were coming in at the slowest rate since July of 2016, and the costs were rising at the fastest rate. But once again, this is before we got the good news. Things are starting to turn really bearish, so I'm sure sentiment was very, very weak. Chinese Xi promises to raise imports amid trade row with the U.S. Chinese President Xi Jinping promised on Monday to lower tariffs, broaden market access, and import more from overseas at the start of a trade expo designed to demonstrate goodwill amid mounting frictions with the United States. So obviously, like I said, China's doing everything it can to, in more ways than one, provide some type of stimulus. Xi said the expo should show China's desire to support global free trade, adding without mentioning the U.S. that the countries must oppose protectionism. With the deepening development today of global economic globalization, the weak falling prey to the strong and the winner takes all are dead in alleys, he said. And finally, with gold prices steady ahead of the midterm elections, traders don't want to extend any risk because of the growing uncertainty around the election, said Stephen Innes. Opinion polls showed strong chances Democrats may win control of the House of Representatives. We are seeing increased wariness that the dollar could run out of steam, which naturally plays into gold if we get a bit of escalation of U.S. political risk. Markets report on a potential escalation of U.S.-China trade have also laid fundamental support levels for the safe haven asset. The U.S. and China are not close to a deal to resolve the trade differences, the White House economic advisor said on Friday, adding he was less optimistic than previously that such an agreement would come together. And with that, does say meanwhile, hedge fund managers raised their short positions in gold by 18,723 contracts to 45,622, according to CFTC. So we'll move this out of the way. Oh, well, actually, we won't. So we talked about this being the pivot in the basic technical news. For right now, 1372, a 2-hour close. You can see the importance right here of 1372. We close right on there, but and we're just a hair below it. But the key would be if we can get a 2-hour close below 1372. As I mentioned, the pivot right here is going to be 1420. You can see this medium-legged doji here. That will be important. So it's going to be our resistance. We are here at the pivot, but once again, we've been kind of pressing a little bit lower. The support is going to come in right there, 1354. That'll be important. You can see it right there. Okay, let's go move into the cable, and it says the 2-hour support comes in at 29.10, confluence with the same level, which is at 38% at the same price. A 2-hour close below 28.70 turns the market back to the bearish mode. 2-hour close above 30.56 sets the initial target for 31.92. So let's go and take a look at that. We're still holding up very well here on the cable, but as you can see, let's move this right there. This is going to be support right there, 29.10. So that's going to be our support. It seems like a little bit of a ways off, but I think that's where the real support right now. We've had this pretty good run up here. We're kind of a little bit sitting a little bit in no man's land. You can see a little bit of a hanging man followed by on the 2-hour chart, but not at the very highs, but 2-hour hanging man here followed by gravestone doji. So certainly the opportunity is to go in and try and push them a little bit lower. There is some support here at 29.32. But I think the real support here, if we were to take a slide, will come in at 29.10. And after this big run that we had, I don't want the support to be that close. And we're, if you trigger the stops here, you come down here, you may see a little bit of a bounce here at 32, but they may want to get, once again, to have to test that. And I think that comes in at 29.32. You can see the importance of this level, and that confluences with this 38% of this run here. Right there. So right now, the resistance right now would be this 30.56. I think they may be able to maybe pop some stops above it, maybe even get a little bit higher, but the key is going to be, I think, on this 30.56. If we can get above 30.56 and hold it, that's where we're going to go to is 31.92. That'd be the upside challenge. I don't think that you have to get carried away with ourselves at this point. We've already had a pretty good run, but my thinking is even if we get up here, we may have to do a little bit more work to get the market pushing higher. So it's going to be 30.56. And I'm still going to leave that for right now as range. After the fall that we saw here, no need to go overboard and turn this as bullish. Now, if you're looking at a very short-term time frame, like an hourly, certainly you could make the case that now things are starting to turn bullish. And certainly we've come out of this, you can see the pretty hardcore descent. But once again, like I said, unless you look on a very, very short-term basis, overall, hard to say that we're bullish now. We need to get back above 30.56 and sustain that. Let's go and move into the Aussie dollar. Well, you can see they made it straight to up here to the 72.55 before running out of the gas and coming back in here. And the 71.86 is a key area. Support at this time for the Aussie, See if they're able to trigger anything below this. We'll put it right there, 71.77. That's if they want to just tick below here, but this is a huge area, 71.86. So we'll, in case you want to trigger some stops, 71.77. We noted here this was huge on the daily, 72.57, and you can see that's right where they ran out of gas, 72.58.5. And you can see the importance here of the 72.55. For right now, that would be resistance right there, 72.23. So rather tight. And let's go and go to the Kiwi. And on the Kiwi, we had 66.22 with 67.20 as a resistance, holding up very well up here. Got some important data coming out this week for the Kiwi. For right now, it's going to be there. We gave it a little bit of extra room in case we saw the dollar pair back a little bit further. So resistance is going to be 66.98. And support will come in right there, 66.07. Okay, let's go on and move into the dollar CAD. So in the Dow account, it's saying a daily close below 30.55. Let's move this over here. A daily close below 30.55 opens the door to 29.35. The pivot on the 2 hour is going to be this 30.93. And we're right there, just about right there, 30.93, with the consecutive 2-hour closes below, suggesting a 100 pip slide with a pause at 30.22. And we'll take a little bit closer look at this. The pair needs a 2-hour close above 31.71 to allow a challenge of 32.88. Price action of last week indicates the market is deciding which direction to break. Downside slides came without much effect. And I'm going to go on and take a look at this and spend a little bit of time right here in what I'm referencing here as far as that. You can see here where we spent a lot of time just kind of meandering, going back and forth, this 30.93. And once we slid below it, look, it really fell off rather quickly. Regardless of whatever news it was, it fell off rather quickly. We tried to come back a little by little. We did a lot of good work coming back and mounting a run here, pushing back above 30.93, which actually goosed some stops. You can see that here. And then we quickly slid right back again. Okay, then we worked harder. It took us a long time to get back up. Market wasn't as forgiving. There were a lot of doubting coming here. We finally push up here, and quickly we slide right back again down the hill for another dip below 30.93, and hence here we are right here. So what I'm seeing here is, at least what I believe I'm seeing is, it's a lot easier for this market just to roll right back down the hill than it is to have to work arduously higher. So I think it is susceptible for a downside move. Now, once again, as I noted, the pivot is going to be this 30.93 right now, and actually it's holding up rather well. But looking out, I think we're going to have to see how, once we get past U.S. elections, we'll see if we can see a little bit more further action here. We are holding up relatively well, but as I mentioned, it's susceptible to downside slides. So what I was saying was a move down here at 30.93 is going to open the door for this market to go on and slide back down about 100 pips. Right here at 30.22. They're holding up a little bit here, but like I said, right down that 30.22, really close to 30.20 is, I think, where they'll try and go to. But you can see we can push a little bit further even beyond that. But I think that'll be the first test down in here if they go and initially slide. But I think the door's open. Like I said, I think that the market's kind of holding its own. I think once we get past this U.S. elections, I think that there is open for a lot of volatility potentially. I think you have to have your numbers above and below, but I think there's certainly a risk that if the Republicans were to fare out better than expected, you'll probably see the dollar continue to go on and move higher. But once again, you can see it move higher, then quickly rescind those gains. So anyway, looking back on here, we're going to go with, let's see, move this out of the way. We know that 30.93 is going to be the pivot. And for us to move lower, we're looking for 2 consecutive 2-hour closes below that, only because we vacillated on both sides. So you could dip and then maybe, ultimately end up recovering. You could close right below it and then pop right back. So we're moving our support a little bit lower. So support's going to be right there. God, it's not even that much further, but it's going to be right there. 30, let's move it just a hair low, right there. 30.84. Not even very far at all. Now for a bigger move, what we're looking at, we need a 2-hour close above 31.71, open it up to get up here. But resistance in the meantime is going to come in at 31.43. 31.43. Now we'll move into the dollar Swiss. We saw this market finally come off, and now it's trying to recover again. We're going to go with this being his resistance right here. Par 60, which is right where we're at, or par 59 right now. And just simply going with the levels, support's going to be par 34, fairly tight. I don't see expecting any real big movements ahead of the midterm elections. And let's go move into the dollar yen. This one is also one that I'm looking at. And focusing on price structure. When I look at the daily, I really don't see anything here on the daily. The market just moving back and forth. I mean, you get some movements where you start to move higher, then you quickly start to lose it. Then you look at this all back and forth, back and forth. So the market doesn't seem to want to decide. Really, actually, what it's doing here is let's see here, up, down, 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 up, down, up, down, up, down. To me, I think the market is trying to find itself is open to push itself. And to me, I think that the market is going to resolve itself on the short-term basis to the upside. And take a look at the work here. Daily suggests a possible test to 1367. The 2-hour price structure points to a challenge of 1389. 1385 is a 78% of the move of 1163 to 1455, and 1381 is 161% of 1131 to 1289. The market should stall as bears and bulls fight then at that point for an upper hand. So I think that what I'm looking at is this market. We made it up here at 1327, and remember this 1341 was a 61%, but we only backed off a little bit. Maybe not I mean, it depends on the way you look at it. I mean, we've been trading relatively tight action, but this market feels like it wants to resolve itself to the upside. To me, we've had opportunities to fail, and the market doesn't want to fail. Also, one of the things that probably push it up a little bit higher is if the midterms don't go badly, or the market, whatever it's how it wants to see it, if it considers positive, it may even look, what I'm thinking is that some takes are, if the Democrats take the House but the Republicans keep the Senate and you get gridlock, that's a good thing. So I think the market is open to resolve itself as this would be a good thing for the market in general, or for U.S. equities. So I think there's this market open to want to push hard. And if you look at it from a price structure standpoint, it just feels like it wants to move higher. You see that? I mean, it's not, when you come up here, it's not like as if the market yanks back, okay? Case in point, our reference was the Canadian dollar, okay? And that's why I was focusing on both of these as far as price structure. You get the feeling, you're 3 steps forward and, big giant step back, where you get these dips and it falls apart. You start to work hard, look like you're really working hard, and then they pull the rug out from under you and you quickly lose. Well, basically, I should say 1 step forward, 2 to 3 steps backwards. You see what I'm saying? Then you have to work hard, finally get going, and maybe they're going to go lower, maybe they're going to turn, so you goose some stops, and you work pretty hard to get up here. Look at that, 1, 2, 3, 4, almost 5 bars. And within 2 bars, you give it all back. You see what I'm saying? So 5 steps forward, I mean, or just a couple of steps to work so hard, and you quickly lose it all. However you did it, I'm just saying, to me, the dollar CAD, I think it's more susceptible to a downside. And when it does hit those downside, you catch some pretty good little air pockets. Look at this. So when you look here at the dollar yen, to me, it just keeps holding up. You look at it, it's holding up right here at the high. So to me, I believe the market wants to resolve itself up to here and potentially right here, 1389, which you can see these 2 fib confluences. We'll take a look at that. And there's a 78%. It's actually just a hair, but it is 1385. But if I try and push it too high or close when you back out, it makes it hard to see it. There we go. Now, here's the deal. This is a 61% they made there, but to me, the pullback wasn't that great. It's an okay pullback, but it wasn't if we saw a pretty good sell-off. So I'd be saying is, generally, if you fail at one, it doesn't just move to the next one. It has to go a lot higher. This was an okay pullback, but it wasn't as if they got turned down and really came down here into the 1220s or something. So look, we're right back up here, and the market's not even holding back. So I think it wants to come up to 78%. That's also a key area right here, 1389. And then, not that it's necessarily that important, but it's just something as an additional confluence. So the market made it up in here, just about this 1293. At this point, we thought we were going to break out and eventually get to 1327. It's just that a funny thing happened on the way to the pavilion, and down we went. But that being said, when we look at this right here, and this fall when the wheels came off, that 161% takes us right there, 1382. All I'm pointing out, not that that has as much relevance or as importance, but it's just some confluence coming in with this key level. I think the dollar yen's going to want to resolve itself and come up in here. I don't think it's going to turn around and go there and then go south of the border immediately. I just think that they're going to hang around here and try and figure out what they want to do for the next leg. And that next leg, I think, could be down, and we could see a far greater push at that point, which actually be 200 pips to take us down here towards this 1166 area here, or just about two and a quarter, or if we call it 2.25 or 225. I want to say, I think that eventually we could move lower, but that's for another topic of discussion. But for right now, I think that the market wants, from the price structure standpoint, it looks like it wants to resolve itself to the upside. And the target that we would go for right now is going to be this 1389. And you've got a couple of things here, confluencing some fibs that work like a magnet. So right now, the resistance, well, we have 1327. I think that right now is going to work more as a pivot, because if you can get beyond that, I think it opens the door for us to move higher. So we're just going to put 1327, but really it's 1327 as a pivot. So I'm actually going to go and even mark that so there's no confusion. And let's take a look at it on the downside. Support will be 1283. 1283. Let's go move into the cash dollar index. Okay, put in the 2-hour resistance comes in at 95.86, expecting exaggerated moves on an election night. Support comes in at 96.04 with 90.48 as the pivot. This one is really, in a sense, I wouldn't say bland, but until we get past midterms, I think we're just in the middle. Once again, like I said that, hey, look, I think that's going to be the top. Well, we didn't end up running out of gas, but I think right now, we're just in a holding pattern until we get past these midterm elections. That's what I think. I don't think necessarily that nothing's changed. I still think this is going to be the top here, or this will be where the market, from where we work, lower. That being said, going into midterm elections, I think that you're open to some volatility. And that's why I don't want to indicate or suggest that right here, there's resistance, we move lower, and then you get blown out on election night, and then only to see the market come right back down. So I think right now we're just kind of a holding pattern until then. So hence, that's why I indicate resistance is going to be 96.86. And you can see we're coming up right there with this. Right there. 96.86 right there. Coming across this high right there. And that coincides with this low and right here. So it's going to be 96.86. Support I have here is 96.50, but we put 96.48 as a pivot. So we're going to call that support right there. call it 96.47. Not much at all whatsoever. Should have said 95.48 is a pivot, so not 96. And the support coming in right here at 96.04. We'll actually get a little bit more room. 96.40 on the downside. But my key is that I'm going to relate is that I don't expect a whole lot of movement in the dollar until tomorrow. You might goose some stops on either side, but I don't expect a lot until I think that the whether it happens or not, I think that there's the anticipation that to me, I think of it as a very, very small microcosm of what happened on election night. You remember what happened on election night? And they thought Hillary was going to win, and then the market swung one way. Then it turned around and exaggeratedly swung the other way. Well, the midterms aren't as important, but it's going to be interesting how the market wants to take it. And so that's why I'm not expecting anything big as far as movements in the dollar until we get into Tuesday night and looking forward. I still think the dollar is going to eventually come lower. I do think that. But in the meantime, I think probably just be a little bit cautious with putting on any positions. Trading, fine, but I wouldn't necessarily put on any positions, outright positions ahead of the U.S. election. You may ultimately be proven right, but you may end up getting stopped out. That's what I believe, but we'll see what happens. Let's go and take a look at gold. So the daily took out resistance on a closing basis at 1237, setting up the next target, which is going to be 1271. Support comes in at 1226 with resistance at 1241 with an intermediate upside target of 1258. And we'll take a look at that. See, there's a daily there, 1237. You see how it closed above that? So it closed above that 1237, and that's going to open the door for further upside. And the response that we saw, you remember we were looking for a pullback to 1216, and we got that. And then we had on that day, our support was 1214. And I think that was when the dollar was really making its highs on the last day of the month. And we actually got as low as 1213. And then look at this huge rebound that we saw in here. Right in here, there's our, look at that. Our support was 1214. Remember, the low was 1213.60. Look at this fantastic rebound here. So it looks like gold has kind of started to find its groove again and trying to move higher. So right now we have a resistance is going to come in here at 1241. Same thing here. I think this is susceptible for some big moves tomorrow night. I think any moves in here pretty much meaningless. Support I have coming in here at 1226. If you really, I'm just looking at the touches here. You can see right there. See here, coming across. Also, 1226 happens to be the 50%. See, right here. So I've got 1226. And I think that they can make it right here. See the solid blue line? See the right here, a little bit of a battle zone. Then the market rate comes back up almost and rotates, come back up here, a little bit of a tag, then a little big battle zone right here. Then as we finally break below that, the market comes down to 48, rallies back up here to 1258 and rotates lower. On a daily, it really looks like it's 1260, but right here, to me, that's going to be your target. If we can get past 41, the initial target is 1258, but I am looking for a move up here to, I have it marked as 1271 on the, right here, that's where it looks like they want to go to. This market also looks like it wants to resolve itself. I wouldn't necessarily resolve itself wants to go higher, but it certainly looks like it has upside potential. I'll say that because it came back so strongly, and it came. We were looking for a move to 1216. It came down there. We just moved the support the following day, just $2 lower, and it made that. And look at this healthy rebound. And even though gold's been holding up very well, the dollar's held up very well. Gold, or should say the dollar's done very well. Gold has held up very well in light of the circumstances. So they came back. They certainly had, if you look at the price action here, remember we talked about that, how the market was just languishing. It had the opportunity to move higher and just languish, and it was having a tough time. And we talked about this. This was the day 2 Fridays ago where the equities were completely coming apart. And then on that same day, we have this bearish dark cloud cover. And the reason I put that trend line, because I said, well, where can it break? And sure enough, that opened the break and opened the door here. But look how smartly we've rebounded here. So I think right now the market's kind of in a holding pattern, but it certainly looks like it's open to go higher, open in a more where the percentages are, I believe, greatly tilted. Where I want to go on and move higher. Has every reason now that it could have easily worked lower, and it's not working lower. So I think that we're going to end up resolving ourselves or pushing eventually higher. I think it's a whole different situation in the price structure with the dollar yen. I think the dollar yen, it wants to go, and it's gonna go. And to me, unless we have something really completely different, I think we're going to want to. This market wants to resolve itself. In this case, I think the market does want to resolve its current action to take us up to 1389. I don't think that the market's going to turn and go south at that point. I think it may stall, and then we'll have to figure out where we can go. But I think the next move will then push a lot of people out of the way, either to the upside or the downside. My guess would be likely to the downside, but we'll see at that point. I just don't think we're going to go up here and turn and give up the go set quick. I think we'll go up there, languish, bump around back and forward, and then maybe a few days later, a week later, whatever, we'll find the tilt to go and move one way or another. Well, looking at the 30-year bonds, we're fairly weak, and we're actually running out of time. I can't believe that. Doggone. Let's just quickly go through this. We're back to running out of time. Support's going to come in at 3703, which is just a little bit lower than we are right now. Resistance right there, 37.20. Hurry up and get to Bunds. Yeah, we're way ahead of time. Now we've turned around and lost all the time. Support here in the Bunds comes in right there. 59.50, we'll call it 59.57. With resistance right there, 59.87. I don't even know where the time went. We were like way ahead of time, and all of a sudden the last half hour just absolutely flew. Support here on the DAX, 11.460. Resistance right there at that key fibish area, 11.575. And there's the bias chart. I'll go on and post that in the room. And thanks for joining us here on the European crossover.